Welcome back to the channel, guys. I've been gone for a while and now I'm back. So, guys, many things happened. I actually was still writing content, but I just didn't have the time to publish video. And I thought, what better time to actually start publishing videos about different exchanges than the bear market. So I actually thought it would be a great time to debut my comeback by reviewing Derbit. And to be honest, last time I reviewed Derbit, I just thought it was just very outdated, very old-fashioned exchange that were basically just offering option. And since then, they did a 360-degree facelift on their exchange, and now I can proudly say that it looked like an exchange. Before, it looked like an trading platform from the 2000, and that no one really look outside and look what the competitor are doing and basically talked about, you know what, maybe instead of reinventing the wheel, maybe we should just try to make an exchange that look as good as the other. And I think someone listened, someone made those changes. So this is their UI. This is the layout, how it look like. So basically, when you log in, you obviously have the option to trade spot, future, option, and basically Derbit is the biggest exchange for options. So you can obviously trade Ethereum, Bitcoin, and since then they obviously decided to also to go into other markets such as futures and spot. So if you are into the option trading market, obviously Derbit is the place for you to go. They have the biggest volume. If you do trade from time to time, spot trading, so obviously I think now most of changes offer on spot trading zero fee. And the only reason why they offer you zero fee because the fee that they generate from spot trading is really insignificant. In the end of the day, they're hoping that you're going to be trading on future or option in this case, where their fee is very substantial. So for spot trading, they have Bitcoin, they have Ethereum, and they have Ethereum BTC. As you probably noticed, they're not offering USDT, they're offering USDC. And there's obviously a reason behind it. The reason why is because they are regulated. And I think when you are regulated, you're also trying to offer and work with a stablecoin that is most likely to be regulated and will have less scrutiny from the SEC or any other government body. So future, you also have the option to trade perpetual and non-perpetual. So different of perpetual is that you can trade without any expiration date. As a default, future has an expiration date, but if you look at perpetual, they don't have an expiration date. As you can see, they don't really have very high volume. In my perspective, on Bitcoin, as of I think today we are the 3rd of September 2023, as the moment of filming this video. They only have 56 million in BTC and 27 million in Ethereum. And anything, if you're to trade anything else, please don't, because the volume is really insignificant. And again, we're in a bear market. When you're not going to be in the bear market, probably this volume will be times 10 or times 20. And then you have the option. Now, option basically give you the ability to trade, the ability to buy or sell the option at a future date. So this is how it works. And when I looked at it 2 years ago, to be honest, even though I studied about option, I've done so many courses about trading in my previous workplace. Option really was something that was extremely complex, in the money, out of the money. So I think one of the coolest things that I think Derbit did is basically create this beautiful widget. Now this widget lets you give you an idea. So today the price of Bitcoin is I think 25,900. So I'm bullish for the long term, but I'm actually a bit bearish. So I think today is, we said, the 3rd of September. So let's call it 24 November. I today price of the Bitcoin is 26. So I'm thinking about, let's call it 16,000. Okay. You know what? Let's say 40,000. This sounds to me very more realistic. So in this case, the gain is only 86%. So I'll be getting 86. So the higher the way it works is, the more unlikely the pricing, the more return you can get. Okay, so this is actually very, very good, and I think, for me, I think in my current stage of life, if I were to trade, I'll be trading this way. Maybe not with one Bitcoin, maybe something that I'm willing to risk. Maybe, I don't know, a way smaller amount of money, but I have done plenty of trading in my life in the early stage, and I think I had enough. Maybe when I get bored, I might open an option position. And yeah, you obviously have some content regarding different strategies. So you have combo, you have block trade, and then you have obviously the setting. Again, Derbit is extremely regulated exchange. You need to go through KYC. As you probably noticed, I'm actually going through KYC. I'm actually doing institutional KYC, not the typical individual KYC. So they ask for a lot of documents. Some cases actually need to look at the fees. Now let's look at Derbit fees. So for those who don't know, a maker is by definition someone that is adding a new line on the order book. So basically, let's say there is price of Bitcoin for 25 and 27, and then basically you add another line order book, and your order book order is at 26. So you are becoming a maker, so you're adding a new line on the order book, and if someone were to take or to accept that order from you, you'll be getting 0.01% fees, which is amazing. And if you're a taker, so basically you see the order book on exchange, let's say 25, 24, 23, and you basically add the order one of those rate, you will be considered a taker. So basically you'll be paying 0.05% as fees. And obviously there's different fees for options. So the option fees are 0.03% of the underlying, or 0.0003 Bitcoin per option contract, and basically pretty much similar to also Ethereum, so 0.03. And as I said earlier, there are no fee for the spot. Now, I think that Derbit is the best place to come and trade option based solely on the volume. That's it. The volume there is amazing, and because they're the biggest, so you're obviously guaranteed that you're going to have plenty of action happening. So there's also some other fees. You have liquidation fees, which is 0.75, and we have delivery settlement at expiry. So basically, you'll be paying these fees based on your gain. If you, let's say, if you're able to predict an option as and then expire the right time, there's going to be another fee from my understanding. So daily option or not, there's no fees. And obviously, if you were to open an option that will, let's say, expire in 5 months, 6 months, anything above 1 week or 1 day, you'll be paying 0.025. So these are the fees. And there are some liquidation fees. The liquidation fees, I think something that started, I think, over the last 3 years. I think during COVID, I started to notice those liquidation fees. So basically, if you open a position and you didn't have enough and you didn't have enough margin, they were forced to close your position because you were about to the amount of margin that you have was not enough to keep that trade open, so they will charge you an additional fees, which is 0.75, including the fee that they charge you. And let's say if it was future, it was 0.05. So basically, don't over leverage. Make sure you have enough margin, so you won't be paying this fee, which is kind of high. But obviously, you shouldn't use very high leverage. And this is so this is future for what? So Bitcoin and USDC 0.75. If it's Ethereum 0.9. So I guess the biggest phase when you have liquidation. And I think that's it. Again, I'm in love. I love the UI. I think the UI is amazing. I think maybe for 2024 or moving forward, option might become more popular around the sophisticated trader. If you are new to the market, definitely do not trade option. Just trade spot, get yourself wet, get yourself familiar with how things goes, and then maybe do margin trading. I think margin trading usually it's up to five. Once you get that level of understanding and you get that risk managed, you can then maybe, big maybe, try future again based on your risk appetite. And then once you maybe after 1 year, 2 years, or depending how often you trade, you can then consider option. I highly do not recommend option trading to anyone new. I think you need to understand how things work. You need to understand there's a lot of technical term, a lot of things that you need to understand before you can actually um, start trading on option. Because when you are trading on future, you obviously basically put a very high leverage and basically wait for the market to go up or the market to go down, and you can see instantly. With future, you basically need to find the right time frame, and then you might have been right that you said by October 2024 Bitcoin is going to be worth 20, not 20, let's say 60,000, and then you said it's going to be by November. So it's also super important to understand all those things before you actually start trading on options. So I think that's it for me today. I already published an in-depth review where I actually went more in-depth about the review. So I tried to make it as light as possible to basically bring my own version, my own spice. But obviously the review that I write, me and my team, are way more in-depth. And I think that's it. If you have any questions, feel free to just write a comment. And until next time, bye bye.